Hi, good afternoon and good evening, good morning, wherever the heck you are watching from. Thanks for joining us on the stream today for our live Q&A session on financial reporting and corporate reporting. This is meant to address some of the few key issues that you have to be mindful of when it comes to financial reporting and corporate reporting. So technically, I'm going to be answering your questions. In other words, any questions you have for me, something you want me to explain specifically, all right? We're not doing the whole show or whatever. Something specifically that you want me to share my thoughts on, you can put it for me in the chat box. I'm going to be providing you with all the answers that you need. So it's a live Q&A session. Those of you coming with me on Teams, you can raise your hand. I bring you up, and then you ask your questions, or better still, you can put it in the comment section for me if your background will not allow you to be with me on the call. All right? Give me a sec, trying to pull up my presentation here. God, he reigns from heaven above with way, wisdom, power. Okay, coming up. So basically, when it comes to the financial reporting, corporate reporting examination, there are a number of things that we need to be mindful of. I mean, to put us in the position to pass the examination. And I'm going to see how I can address some of those issues. Especially, I think just this afternoon, someone sent me a message and the person was like, oh, they don't have time, but they want to study. So what areas should they look out for? And you know my response to such questions, right? Because, sometimes people feel because they don't have time available, they can do some shabo things and they should be good at the end of the day. But I want to quickly bring you up to speed. So hold on, let me connect to my okay, there we go. So I want to quickly bring you up to speed with some few things again that we need to crystallize on, and then some principles that we need to be mindful of as we go into the exam hall when it comes to financial reporting and corporate reporting generally. so that we can put ourselves in the position to pass the examination. So as I mentioned, someone asked me, the person was like, yo, Nhyira, I've been busy. I mean, I'm a busy person, you know. But how do I, what are the things? Let me actually try to read verbatim what the person sent. And, you know, it reflects a lot of the things. The person was like, I will greatly appreciate your guidance on the key areas to focus on. Covering the entire syllabus at this point is not feasible. So your direction of high yield topics will be extremely helpful. So this was the person's concern, that at this point, covering the entire syllabus is not feasible. If at this point you are thinking about not being able to cover the entire syllabus, then there is a problem to start with. Because when it comes to financial reporting and corporate reporting, we know what exactly that has to be there. It's not like, yeah, you can focus on some topics and go away. There is nothing like focusing on topics. Why? We know there will be a 20 marks question on theory coming in the exam hall, right? You know that 20 marks question on theories that will come in the exam hall. I want to see if I can bring that up here. So there will be 20 marks theories coming in the exam hall. Give me a sec. Let me see if I can pull that up quickly for you. FRERM. Oh, I'm losing where exactly those topics are. Just give me a sec. Let's see if I can get it. Yeah, here we go. So for financial reporting and corporate reporting, if you are going into the exam hall, 20 marks coming in on the theory areas. Now tell me, which of these theory areas do you want to focus on? Which of them do you want to let go? So if there will be 20 marks question on theory coming in the exam hall, you cannot pick and choose from this. Do you get the idea? So to pass the financial reporting or corporate reporting examination, we know there is a 20 marks minimum on these areas coming for us. Integrated reporting, data analytics and blockchain, the IT issues, IFRSs will be there, sustainability reporting, governance and ethics, theory on consolidation. So the 20 marks theory area, which one do you want to pick? Which one do you want to ignore? I cannot tell you that, oh, there's one I'll bring question on integrated reporting, governance, don't learn the IT part, don't learn the consolidation theories. No. These are the options available to the examiner when it comes to dealing with the financial reporting or corporate reporting examination. So at this point in your revision, at this point in your studies, you should be able to have read through these maybe at least once. Because some of you are lying to yourself, and I have told you this over and over again in class, right? That, oh, Sunday evening, I'm going to sit down and I'm going to read all these theories. Omale, Ofe, you're not going to do it. But it's a 20 marks area. What does that mean? It means that the same time that you have to allocate to consolidated financial statement, to ratios, is the same time for these theories. So if you come and you say, hey, Nhyira, it's not possible to cover the areas or to cover the entire syllabus, which areas should I focus on? Wait, this is 20 marks theory. What else should I tell you? What else should I give you than telling you that you will have a 20-mark question on theories? It will go and read all of these things. But the thing is that people are of the opinion that, oh, they are tired. Not that they are tired, but they don't have the time available. They are busy. And so, Nhyira, I am busy. I am busy. So, which of the theories I should focus on? I cannot tell you to focus on which theories or which theories not to focus on. My job is to let you know the structure of the syllabus, the things that the examiner is going to be getting excited about. Then you can go into the exam hall and pass the examination. So 20 marks on theories in financial reporting, corporate reporting. My question to you is this. At this point, have you gone through integrated reporting again? Have you gone through the IT issues? The standards issues, definitely under IFRSs, sustainability, corporate governance, ethical issues. Have you gone through these? That is the first point of action. It will be there. These 6 things that I've listed, 6 or 2, 4, 6, 7 things that I've listed here, 4 or 5 of them will be in the exam hall for that 20 marks theory area. Like, what else do you want? I could add conceptual framework issue to it. All right? The conceptual framework issue. What else do you want? So, as a student, going into the financial reporting or corporate reporting examination, 20 marks theory waiting for you in the exam hall. You have to learn it. So there is nothing like which topics can I focus on to pass the financial reporting examination. There is nothing like focusing on topics. Everywhere in the syllabus is a road for the examiner to walk. So that's the first thing. That's the first thing. Then the second thing is going to be evaluation of financial statement. We know we're going to be having questions on evaluation of financial statement. 20 marks or 15 marks, depending on where we are standing. It will be there. Evaluation of financial statement, 20 marks. But the key question we need to ask ourselves is, what are the options available to the examiner when it comes to evaluation of financial statement? So, you know, ratios will be there. Either the examiner will ask you to calculate the ratios and then interpret it, or the examiner will present you the opportunity that the ratios are already there, write me an interpretation. So it's a done deal area. My question is, how strong are you when it comes to the evaluation of financial statement? So what then I can assist you with is the breakdown that we had when it comes to dealing with ratios. So you all have the ratio analysis, your friend is saying, document. Let's see if I can pull it up again. And we've done this already as well, right? We've gone through this already. Let me pull it up. So what I can do for you is, okay, that ratio that is coming, what are the options available? When it comes to evaluation of financial statement that will be coming, what are the options available? So at this point, if you are studying, you should have solved questions under each of these types of ratio questions, because evaluation of financial statement will be there. So we said you could have the single line, simple financial statement questions, and you are calculating the ratios, writing the interpretation. That is all. The second styling of question is where we said the examiner will present you the financial statement or the ratios, then you're supposed to analyze. The third styling of the question is the vertical or common size analysis. Like what came last semester, financial reporting. Then you write the analysis. The fourth styling of question is the changes in business, which is at the beginning of the year, the entity sold part of the business. At the end of the year, at the beginning of the year, the entity has acquired another business. That styling of question, how do you handle it? What adjustments do you need to do? How do you calculate the ratios? How do you do the interpretation? Then the fifth styling of question is financial statement with footnotes. And we've done this as well, where we have been given the footnote, so we must adjust the financial statement and sana or before we can calculate the ratios. Then for corporate reporting students, cash flow analysis, consolidated cash flow analysis. So if you are going into the exam hall, financial reporting, corporate reporting, evaluation of financial statement will be there. 15 marks or 20 marks, depending on how excited the examiner is. So the question at this point, with less than 6 days to go to the exam hall, is to ask yourself, have I exposed myself to questions? Have I solved questions? Have I considered scenarios under each of, under each type of options available for the examiner to ask me? That is the thing. And the reason I'm emphasizing on this is because of what I started with. That there are many people who are like, yo, I'm busy. It is this week that some people will be taking their leave. And when they take their leave, the agenda is, hey, I can't go through the entire syllabus. Well, what should I focus on? Which key topics should I focus on? There is nothing like key topics of focus. There is nothing like key topics of focus, because the examiner will come for your head everywhere in the syllabus. So that's the second area that we need to understand. 15 or 20 marks on evaluation of financial statement. So my question to you again will be, Joyce, Francisca, David, Sita, my question will be, have you solved questions? Have you watched videos in respect of each of these styling of questions? And can you write the analysis under each of these perspectives? Because the analysis write-up, based on the structure of the question, is also slightly different. So have you exposed yourself? Because there will be question on evaluation of financial statements. How prepared are you to handle whichever of these 6 that the examiner presents you with? That's what you must understand. That's what should be your concern now. So, as I said, the learning strategy at this moment will be, okay, we know those theories are going to come. Have you read them? 20 marks on these theories. Because the strategy is that in the exam hall, you're going to be answering those theory questions first. Then we come to evaluation of financial statement. How strong are you in the evaluation of financial statement? Just the add-on that we mentioned in the Saturday session, if you remember, that in corporate reporting, in addition to the financial performance indicators, we'll have the non-financial performance indicators. So if you remember in the discussion, we brought in some scenarios. Let me just take you there again, if I could. Treatment of consolidated, no, not this one. Okay, it's in FR, not CR. So FR, ERM, the last session. Yeah, here. So in corporate reporting, in addition to the financial issues, there will be non-financial performance indicators. In almost each examination that about ratios, we've seen it under this new syllabus. So do you get the concept on interpreting the financial statement of the entity using these financial performance indicators, using these financial ratios? That is what I can do for you. So again, yes, you are on leave this week, some of you. Some of you, your leave may start on Wednesday. Then you are asking, oh, which topics can I focus on? Sister Akos, there is no topic of focus. Ejake, everything will be asked in the exam hall. So number 1, our theory issues, what we need to understand there. Right? Then number 2, evaluation of financial statement, the styling. The styling. The third area will be the issue that we mentioned keenly about for financial corporate reporting students, business valuation, and then financial reconstruction. One of these guys will be there for 15 marks. So if you tell me, Nhyira, which topic should I focus on? What do you expect me to tell you? One of these will be there. So you want me to tell you business valuation will be there so that you ignore financial reconstruction? Or I should tell you reconstruction will be there so that you ignore business valuation? No. One of these two guys, business valuation, financial reconstruction, will be in the exam hall. The question is, how strong are you in these two areas? Because one of them will be waiting for you. And you remember the principles we discussed when it comes to dealing with the issue in respect of these areas. So if I take you back, as we are revising and revisiting principles, here, the key principles when it comes to corporate reconstruction. We said under the reconstruction scheme, whether you like it or not, we're going to be preparing a capital reduction account. It is also an account that is helping us to calculate the gain or loss under the scheme. And the purpose of the reconstruction account is, among other things, doing three things. That is, it acts as the control account so we can complete the double entry. Number two, it helps us to determine the gain or loss from the scheme. And number three, it helps us to also record any fair value gain or loss on remeasurement of assets and liability. Because you know, under financial reconstruction, it is like we are having or bringing in a new business. And so the assets and liabilities are revalued. If the assets and liabilities are revalued, then the question we tell ourselves is, how do we provide the changes in the value based on what we have available as an entity? So that is what is going to be happening there. Second is the equity account. Under reconstruction, you have to prepare the new share capital account. Then there should be a bank account, because any cash proceeds or any cash coming in, we have to handle that. Then there could be other workings based on the context of the question. But in every reconstruction scheme question, after that, we must prepare financial statements. And either the examiner will work with you on the preparation of just the income statement and the financial position, or the examiner will ask you to prepare the statement of financial position. Because under every reconstruction scheme, this will be done. So we then highlighted that when it comes to reconstruction, the key issues we have to focus on, the key issue that we have to be mindful of will be English language. So we can get a context of the question. Number two, application of the standards. And then number three, the application of the conceptual framework. And if you have exposed yourself, we've solved questions in class. There are other questions also available under the practice question course that some of you have access to. These principles are applicable. So the 50-mark question, if the examiner is coming for your head on financial reconstruction, these are the rules. And we've used them to solve questions exposed to various questions. Another critical question also under the reconstruction that I will ask you to review as part of your revision is the grave cottage question. Right? The grave cottage question. In the practice question course, that video is there. You can watch that video, because that grave cottage question really also goes through the entire principles, and there are a lot of issues as well there that you need to understand. So, financial reconstruction, how far? Where are you at this moment? That is the thing you must understand. Then we know that when the business is going down during liquidation, the rules that we are supposed to apply. Because remember, the examiner can present that in the two scenarios. The business going down and then reconstruction. So if we are liquidating the business, what are the rules we need to be mindful of when it comes to liquidating the business? What are the principles we need to be mindful of when it comes to liquidating the business? We said the assets will be sold, and then the issue in respect of cash proceeds coming in, then we start with the distribution and the rules that governs distribution. The reason why I said make sure you review that grave cottage question is because the grave cottage question walks through the entire things under financial reconstruction. You're going to see the liquidation issue. You're going to see the reconstruction issue. Then you're going to see the explanation of the position of key stakeholders if the business goes down, the position of key stakeholders if the business is restructured. So whatever you're going to do as part of your revision, you make sure, in addition to everything that we have done in class, make sure you watch that video if you have not already, because it's going to open you up to really crystallizing some of these things. This is financial reconstruction. Then we come to the second part of this 15 marks area, which is business valuation. So permit me to draw the inspiration that we had when it comes to business valuation as well. In business valuation too, the law is the law is the law. It doesn't matter what question the examiner brings. We must understand the key fundamental principles when it comes to business valuation. And under that, there were key takeaways. The first thing we said was, remember the context of the question. Read the question to understand, because some accounting standards will be applicable. And you've seen it. During our ERM session 1, we solved questions under business valuation, and you saw the accounting standards that were at play under that business valuation question. Again, on the portal, I think there is this question, BFC Co. Under the business valuation videos, under the practice question, there is another question there called BFC Co. It is a video that I will also request of you to watch in business valuation. So you there, do Kadayakra, the Grave Cottage question, go over it again. Then the BFC question. It's a business valuation question, but you will see the standards there. Because each of the footnotes under the business valuation is an accounting standard. So in addition to the questions we've discussed in class, in assignment, during the revision that we are still on, the questions that we've discussed in ERMS 1, ERMS 2, add those two questions that I've mentioned. 2, the dividend of preference shares must be considered in the calculation of earnings per share. 3, the P/E ratio of the proxy firm must be adjusted downward. Either it will be given to us or we will exercise our own discretion when it comes to the P/E ratio. DY and EY of the proxy firm must be adjusted upward to take or to make room for the issue in respect of equity risk premium. 5, the contents of the question will determine whether when it comes to the dividend valuation method, you're going to use the constant dividend or constant growth in dividend. 6, when we come to the discounted cash flow method, there are 2 things we said you have to be mindful of, and you've seen it being applied during class, during our discussion, that we use the before depreciation cash flows, the pre-depreciation cash flows. Then we are interested in future cash flows. That is the cash flows from the year ended under review. That is what we are considering. This is business valuation and financial reconstruction. So the 15 marks question that will come on business valuation or financial reconstruction, if you say, Nhyira, give me an area to focus on because it is not feasible to cover the entire syllabus at this time, then you will go and fail the exam. Because what do I tell you? That, oh, focus on financial reconstruction, don't do business valuation. Or I am the examiner, well, I'm going to bring business valuation, so just learn the business valuation because you're a busy person. Don't learn the financial reconstruction. No. So we got theory, 20 marks coming in. Right? So we got theory, address that, 20 marks. We got evaluation of financial statement, either 15 or 20, depending on how excited the examiner is, coming in. We got business valuation and financial reconstruction, 15 marks coming in. Then from here, we open ourselves up into the grandmaster of the syllabus, and that will be the accounting standards. Directly, you're going to have a 30 marks question on the standards. 30 on the standards, directly, waiting for you. And that will be question 2, and then question 3A. That will be on standards. 30. So question 2, 20 marks is on standards. Question 3A, also standards. So here, which of the standards should I tell you to focus on? We've mentioned a couple of things. That for the most part, we have to be mindful of the non-current asset standards. Okay, so the non-current asset accounting standards, we have to know them. We have to know them. And what are these non-current asset accounting standards? IAS 16, property, plant, and equipment. IFRS 5, non-current asset held for sale and discontinued operation. IAS 40, investment property. IAS 23, borrowing cost. IAS 20, government grant. IAS 36, impairment of assets. IAS 38, intangible assets. And we are just getting started. Because to be able to deal with these standards, they have some relationship with IAS 12, income tax, IAS 37, provisions, contingent liabilities, contingent assets, and IFRS 13, fair value measurement. Again, I'm only getting goosebumps. So if you say, Nhyira, the 30 marks question that the examiner will bring on the standards, what should I focus on? What do you want me to tell you? You say, it's not feasible. What should I tell you? I'm just getting started. I'm not getting goosebumps yet. We are just getting excited. So on the non-current asset side of things, these are the things you must understand. And you cannot, as a financial reporting student or corporate reporting student, go into the exam hall without understanding at least these accounting standards. Then don't even go. Because whether you like it or not, you're going to be applying principles in about 5 or 6 of the standards you see on your screen. In the exam, you are going to write on Monday. So whether they come as a dedicated question or not, they will be embedded somewhere. You got to know them. So if you say, I don't have time, Nhyira, how can I? You cannot. You must create the time and learn everything. And Nuntina, at this point, what you do is what I keep on telling you. Go to the key summary videos in the mobile application. Okay? The Nhyira Premium mobile application. Because you can go through these standards in record time to grab the principles. Or contextualize the principles. Or, revise the principles. That's the starting point. When you finish, now you got to expose yourself to questions. And that is where the practice question courses also comes to play. So in the practice question course, we have numerous videos covering these standards. And again, we are just getting started. For corporate reporting students, we know the Acclaimed, IFRS 2, business share-based payment, IAS 19, employee benefit, which we've dealt with, IFRS 8, operating segment. We've dealt with these issues as well. These are corporate reporting exclusives. Yes, you may go to the exam on Monday, and there will be nothing about these 3 guys. Yeah. It said it's the examiner's dance. He can decide not to bring anything. But it is in your syllabus. Well, you have to learn everything. That's the idea. So this is exclusive for the top guys, corporate reporting students. Now, so in addition to the top non-current asset issues connected with the 3 guys, corporate reporting exclusive, there are some 3 musketeers that go together. And that is these guys. IFRS 15, revenue from contract with customers. IFRS 16, leases. And then IFRS 9 and IFRS 7 and IAS 32, financial instrument. You get the idea? So we have IFRS 9. That is financial instrument measurement and recognition. We have IFRS 7, that is financial instrument disclosure. Then we have IAS 32, that is financial instrument presentation. The IAS 32 is where you see convertible loan notes. Tomorrow during the ERM in the FR class, we're going to be bringing some questions up. You're going to be seeing how those deals are done. So these three standards, you must know them before you get to the exam hall on Monday. Am I scaring you? No. I'm just telling you what is available at the disposal. The arsenals that the examiner has at its disposal, that is going to meet you with. And you can only handle it if you know. Now, in addition to all of these guys, there are other standards that I have not spoken about yet. And those are the other baby standards issue. IAS 10, events after the reporting period. IAS 8, accounting policies, changes in accounting estimates and errors. IAS 33, earnings per share. These things are there. So the question is, the 30 marks question that the examiner will bring, corporate reporting student A, on standards, no? Which of the standards do you want to focus on? Financial reporting student, in your case, it will be 40 marks on the standards because you have dedicated IFRS question 20 marks and then the single entity financial statement. Whether you are dealing with cash flow or normal financial statement preparation, this is for the FR students. Everything there is also on the accounting standards. So the question is, these are the accounting standards available that the examiner can choose from. If it's only if you are lazy, then you will say, I want to focus on something. You cannot say you want to focus on something. You are expected to have known everything by now. What am I saying? This is in your syllabus. And as I say always, don't say, I need to check the past questions. Last semester, the examiner asked question on 41. The examiner asked question on IAS 33. The examiner asked question on IFRS 15. Then it won't come again. Why are they? Why are they? The standards are the standards. You cannot be a financial reporting or corporate reporting student without knowing the standards. And your examination, about 70% of your exam actually depends on the accounting standards. So this is the deal. This is the flow. This is the option available. So check it. There is nothing like you can focus on something and pass the exam. If there is anything you can focus on to pass the exam, I will say is the accounting standards. Because if you are strong in the accounting standards, 99.9% of the time, a lot of issues you can deal with. But even if you are strong in the standards, the principles, the theories, how far? The evaluation of financial statements, how do you do the adjustments? How do you write the analysis? So everything works hand in hand. So again, guys, there is no shortcut anywhere. There is no voodoo, magic. There is nothing anywhere. Don't be deceived that there is a part of the syllabus you can just focus on and go and pass. It won't happen. Your results will come and you get 15 over 100. Because the examiner will come for you in all aspects of the syllabus. Then we come to the last area of the syllabus, which is consolidated financial statements. Question 1, which is a journey we've been on during our revision session. 20 marks, question 1 in the exam hall. And this is the breakdown of your syllabus: financial reporting, corporate reporting. That's the idea. So in case you are in the same position as the message that I just read, that As I enter this last week of revision, I will greatly appreciate your guidance on the key areas to focus on. Covering the entire syllabus at this point is not feasible. So your direction on high yield topics will be extremely helpful. What do you want me to say? Oh, ignore consolidation. Learn the standards, you'll be good. No. Everything is high yield. The theories is 20 marks, high yield. Business valuation, financial reconstruction, 15 marks, high yield. Evaluation of financial statement, 15 or 20 marks, high yield. The standards, dedicated, 30%, high yield. Consolidated financial statement, high yield. What should I tell you again? So, yes, if you have not been studying all this while, and this week is the week of transformation, then you're going to be under pressure. But this week is not to be a pressure week. This week is supposed to be a relaxing week where you are just flipping through your books. Okay, what else have I done? What else haven't I done? Okay, when it comes to the ratios, Nhyira is mentioning, oh, I've not looked at this styling of ratio question before. Okay, so let me go and look for that ratio styling of question that Nhyira is talking about, because I've solved questions in respect of the other areas. That is what you are doing at this time. Okay? That's what you are doing at this time. Jenny, Paco, you are coming to say that, oh, you want to do this, you want to do this, you want to do this. Okay? Some of you are just too, lazy, and you like to have shortcut. There is no shortcut for ICA. Okay? There's no shortcut. There's no shortcut. Yeah, I understand. You are busy. You have a lot of things you are supposed to do. But the reality is, there is no shortcut to pass the ICA. That's the reality. That's why I'm presenting you with this whole discussion again. Tell me, if you were in my shoe, the theories, which one will you tell your student to focus on? The business valuation and financial reconstruction, 15 marks, I should tell you to focus on one and ignore the other. The accounting standards, 20 marks. Oh, okay. The accounting standards is a lot. So, Nhyira, which of the accounting standards are you sure that, based on your expertise, the examiner will bring? That's not my work. My work is to teach you, explain to you, expose you to questions, guide you. That's my work. My work is not lottery. I'm not a prophet. So, if you are waiting for any card, or you think you will go somewhere and get a card that will tell you, oh, whenever. Congratulations. You're going to cry after the exam and cry when your results is released. Because this is your syllabus. To pass the exam, you must cover everything. So that's the starting point that I want us to crystallize. Because when my assistant showed me the message, I was like, yeah. Because I didn't even know what to type as a response. Right? I didn't know what to type as a response. But that is the idea in respect of that. So please, everything here is a high yield topic. Everything here is a key area. So let's work ourselves out in all of the areas. In all of the areas. Any questions, put it in the chat, or those of you with me on Teams, you can raise your hand. I'll bring you up if you have any specific question. I'm seeing some comments coming in on YouTube. Let's see. Maybe I can address that. Let's see. What do I have? Nathan, is it a former mentor? Oh, okay, Nathan, I hope you're doing well. Then Jerry Donzi, please say, when are you treating corporate reconstruction and financial reorganization? I mean, on your YouTube channel. I can't give you a date, Jerry, on when that topic will be treated on YouTube, unfortunately. I can't give you a day. I wish I could. But you can get access to that in our courses. You can enroll in our courses and get access to those content, because I'm not sure that content will ever even be posted on YouTube by my team, because they are going to be available on our courses, so you can get access to them. So I can't tell you when it will be available, but what I know is I don't think my team will ever put some of those things on YouTube. Definitely, that one I can tell you that, but I can't tell you when it will be covered on the channel. So that is what we must understand in respect of that. I think those are the comments that I have here in that case. Okay, so Barry, no, okay, no, give me a sec. Okay, so with no other questions coming up, let's see if I can touch on something quickly here. Nhyira, please, you can go over question 5 areas for FR once more. As in, you can go over the 5 questions areas for FR once more. Like, that's what I said here. The theory, 20 marks, right? Evaluation of financial statement. Then single entity and the standards. So single entity 20, whether cash flow or how do we call it? Normal P&L and position. Then the accounting standards 20 marks. Then number 1, question 1, consolidation. So that's the arrangement. So for FR, the arrangement is that question 1 is console, right? Question 2 is on the IFRSs. Question 3 is on the single entity, which can be cash flow or P&L and OCI. Question 4 will be on evaluation of financial statement. Question 5 will be on the theory issues that we need to be mindful of. So that is the breakdown of the syllabus for of the questions for financial reporting. And that's coming in from David in that case. Okay. So let's see if I can bring some of the theory issues and we highlight a little bit on them. That's 20 marks theory areas that we said the examiner will be getting goosebumps on. Let's see if we can walk through a number of them, maybe in the next, few minutes. Then we can go for the day. Give me a sec. I want to see if I can pull this up again. FR, ERM, them. Look at me, oh Lord, and answer my prayers. Restore my strength. Don't let me down. Oh, the theory issues that I saw a moment ago. Give me a sec. I want to see if I can get them to bring them up again quickly. Oh, Eba Semni. Yeah, this is it. Let me actually copy it into my slide here. Okay. All right, there we go. So the 20 marks theory issues, these are the options available to the examiner that we have to be mindful of. Maybe let me touch a little bit on governance, all right? Corporate governance, and then ethics. Yes, there is governance now in financial reporting. It's in your syllabus that you have to know about. Corporate reporting in that regard that you have to know about. So corporate governance. Because I always tell you that You see, when you are learning, the exams you are going to write, you must know what the examiner has on you. What do I mean by that? You must know the syllabus. So permit me, let me show you something all the time. This is it. So this is your syllabus. This is your syllabus. So you see that I did not lie with the breakdown that I gave you. This is corporate reporting. So the standards, dedicated, 30. Consolidation, the reason you are seeing 25 there is because under the theories, there is a 5-mark question on console that the examiner can bring. As you can see here, 5 marks. So when you are seeing consolidation 25 in the syllabus, that is what it is. Evaluation of financial statement, 15. But as I said, in some cases, the examiner can do 20, depending on whatever he wants to do. Then we have the specialized transaction. Then the theories that I mentioned, 15 marks. But because the consolidation 5 is coming to attach to it, that's why we make it 20. So under those theoric areas, we have environmental, social, governance, sustainability, and other contemporary issues and ethics. So this is your syllabus. And that is exactly what I am demonstrating to you here. Do you get the idea? So whatever subject you are writing by extension, go to the syllabus. So you know, okay, so if you check this, you will then realize that to pass the examination, baby, there is no area you can focus on. Do you get the idea? You can't say I'm strong on the standards, but I won't look at console. Or you can't say I'm strong on specialized transaction, I won't look at the ratio analysis. So you have to know everything. Do you get the idea? So that is what I want you to understand. Go to the syllabus and then work yourself out. Let's go to FR quickly, then I'll come back. Then we go through the discussion. So in financial reporting, this is what we have. Regulatory framework, legal, ethical framework, international, conceptual, current issues, yada, 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 15. And all those areas are the theory issues that the examiner will bring. 15 marks. Then the application of the standards. Then the single entity, cash flow and P&L and position. Then consolidation, analysis of the financial statement. So this is the flow. So when you know this is your syllabus, then you know that you got to walk through everything. Because under the current issue here, that's where you are seeing those governance issues, IT issues coming up. So please, for avoidance of doubts, it is important you get the syllabus, go through the syllabus for yourself so that you understand. Because what I will do is to guide you right. This is my world. I dance here, morning, afternoon, evening. So when I'm telling you something, it's not that, I'm just telling you out of thin air. So you see, get the syllabus to get a breakdown. So you see, explain and apply provisional of governance framework here. So in the FR, there is governance there. In the CR, there is governance there. It's in your syllabus. So if you go walk to the exam hall and you see a governance question, you say, then you will be wrong. All right. So that's just by the way. So corporate governance and then ethics. Let's start with the governance area quickly, if we can go through that. Permit me, let's see if I can bring up a slide, my slide on governance that I could share with you guys. I think we've shared this with you, okay, as well. For those of you with the book, if you don't have the governance notes, I think you can request that and it will be shared with you. Give me a sec. Let me pop up this slide quickly. Current issues. Do we have a corporate governance here? Okay, sustainability. Okay. Please give me a sec. Let me see if I can get my governance slide quickly. Just a short slide to go through with you. I thought I had opened it up in my slide already, but I hadn't. Okay, give me a sec. For privacy purposes, let me just go here so that FR governance notes. I'll come back with my screen a little bit in a moment. Just stay with me. Because of privacy purposes, so I had to change my screen and gotta be careful what I show on my iPad. Okay, so I've seen it. Give me a sec. I'm bringing it up. All right. So corporate governance. Governance generally is the way an entity is directed and controlled. Francisca, can you check something? The current issue note that was sent to you, I'm not sure, because I was checking the mail for what was sent. I'm not sure. Confirm to see if there is governance in that document. If there's no governance, then you can send a follow-up message on that so that you get that note as well. Because it should be part of the current issue note, but I don't know which of the current issue notes that was sent. So you can confirm that so that you make sure you have all the notes. So corporate governance, this is a 5-mark question the examiner can throw at us in the exam order we need to dance around. So it's part of the theory areas. So in a simple language, we say that corporate governance has to do with the way an organization, the system by which entities are directed and controlled. Now, the thematic issues that we have to be interested in financial reporting and corporate reporting is to look at number one, the corporate governance codes or practices. We have what we call the rule base and then the principle base. As you get the concept, rule-based governance practices or codes simply means that these are backed by law. Now, currently around the world, one country that is practicing the rule-based corporate governance principles or code is the U.S. with the U.S. Sarbanes-Oxley Act. And that imposes specific rules on corporate governance. Okay? Ghana, our corporate governance code is a little rule-based, a little principle-based. We'll get into that in a moment. But we have the rule-based principle and then the rule-based governance code, and then the principle-based governance codes. So the principle-based governance code are generally accepted, internationally accepted best practices for good corporate governance. All right? Best practices. So for instance, to enhance good corporate governance, for instance, we say that the role of the CEO and then the board chairman should be separated. This is best practice. It doesn't mean when a company has its CEO and the board chairman being the same person, they are breaking any law. No. But international best practice says that the CEO is the head of the management team. And they are responsible for implementation of the strategic directions. The board chairman is the head of the board. And they are responsible for designing the strategic direction of the company and playing an oversight responsibilities over the people who will be doing the implementation. So if we have the person who is supposed to oversee strategic direction, oversee implementation, the same person who is implementing it, then, the board's effectiveness may not be looked at well. So that is a best practice thing, that the CEO and the board chairman, that is too much power in the hands of a single person. So ideally, the board chairman should be a non-executive director, whilst the CEO is an executive director. Meaning the executive director simply means the person is an employee of the company. Goes to work regularly. A non-executive director not an employee of the company. A member of the board comes in as and when required to be able to undertake their work. That is best practice. That's best practice. Do you get the idea? So those are principle-based issues. Then let's come to Ghana, because, we got to talk about Ghana. So in Ghana, and as I showed you a moment ago in the syllabus, it is specific that we must know governance principles based on the things that are available in Ghana. So in Ghana, we have the Companies Act that gives provision on corporate governance issues that we need to understand. So as per the Companies Act, what are the governance issues that we need to understand? I think there was a question like that in the November 2024 or March 2025 or so, one of those guys, there was a question like that. So let's come first. So two broad things we will focus on. The Corporate Governance Code issued by the Security and Exchange Commission, and then the Corporate Governance Code in the Companies Act 2019, Act 992. So let's start with the issue here. Now, this is the deal. You must understand each of the key areas that each corporate governance code is covering, because the examiner can just pull an area and ask you a question about it. So we wouldn't necessarily be asked to write BBR under a code. Maybe the examiner may not go that far, although he could. But what we've seen the examiner doing is, and also likes to do, is to just extract a key area of a governance code and then ask students questions about it. So the first area is the role and responsibilities of board of directors. As I mentioned, the board of directors are responsible for providing strategic leadership, direction for the company. They determine where the company should be, how the company will get there, what are the various things that we have to focus on. That is the board. But who can be on the board? And that is the second thing, composition of the board. Because the board must have some level of people. So, for instance, an effective board is a board that has, as we said, some non-executive directors. A board that has some independent non-executive directors. What's the difference? An independent non-executive director is a non-executive director who has no financial interest, or just, even if they have any interest, it's an insignificant financial interest in the company. Right? So let's say we have MTN, parent entity in South Africa. On MTN Ghana board, they have some of the directors, non-executive directors, representing the parent company on MTN Ghana board. So they are non-executive directors, but they are not independent. Then on the MTN Ghana board exclusively, we have independent non-executive directors who have nothing to do with the parent entity, have nothing to do really with MTN Ghana. Even if they do, their interest is nothing to write home about. So an effective board must have independent non-executive directors. At least 1/3 of the non-executive directors must be independent. That's the deal there. Then there has to be some diversity on the board. We don't want to have a board that have just one-line people in it. No. We must have somebody with knowledge on. So when we talk about diversity here, we are talking about skills, experience, or if you want, expertise. That's the first thing we mean by diversity. So on the board of the company, there's somebody with HR expert. There's somebody who is an IT expert. There's somebody who has legal knowledge. There's somebody who understands procurement. There's somebody who understands governance. There's somebody who understands sustainability issue. That is diversity on the board. Then not only that, the agenda that we are promoting now, gender balance. Okay, so some level of representation of women, marginalized people, should be on the board. That is the second thing we must understand, the composition of the board. And this rule says simply that a board of directors collectively and individual directors should act with integrity and bring independence of thought and judgment to their role. Therefore, it is important that the board should have a suitable balance and consist of individuals with a range of backgrounds and experience. That's the second thing. Third, financial reporting and narrative. I mean, the board must ensure that, financial statements are prepared regularly. Very important. Then the next one is directors' remuneration, because these guys have to get paid, right? But this is one thing you must understand. HR doesn't determine the salary of board of directors. HR doesn't determine the salary of board of directors. Who determines the salary of the board of directors? It is the remuneration committee of the board. In other words, it's more or less like they will determine their own salary, because the remuneration committee is a subcommittee of the board. We have the risk management committee, we have the audit committee, and all of those guys. But the code says that the determination of the remuneration of the board of directors must be a balance of both achieving short-term goals, medium-term goals, and then long-term goals. The remuneration structure should not be structured in such a manner that it is just going to satisfy the need of managers meeting some short-term goals and sacrificing long-term sustainability, growth, and profitability of the entity. So in the determination of their salaries, what do we take care of? This is a specific question the examiner has asked before, and he can ask it. So according to the Ghana's Code of Best Practice, there are 3 statements about remuneration. In other words, when an entity, the committee is determining the salary to be given to the directors, 3 things. Number 1, it should be competitive. Yeah. So a company of that size, board of directors in other companies, on the average, how much are they taking? So it should be competitive, because you don't want to pay them below what their peers are getting. If not, then they will make decisions that will, give them more interest. So it should be competitive fairly. Number 2, it should be performance oriented. You don't pay people because of their position. You pay them because of outcome. Do you get the idea? And that's one of the problems about salary scheme in even the public sector. Remember, there are some public sector skirmishes issues that we could see, but it's under governance. Like our public sector in this country, right? You see board chairman of board chairman of Electricity Company of Ghana, board chairman of CEO of Gold Board, CEO of this, ridiculous amount of money. But you ask yourself, okay, your tenure there as the board chairman of ECG, your tenure there as the board CEO of Gold Board, your tenure there as the CEO of this institution, what did you do? And there is nothing to show for it. Good corporate governance says that management, the board of directors' salary should be performance oriented. So there is a base amount you take. Anything in excess of that, you must show results. So if you have not achieved anything, why should we pay you? But that is one of the problems in the public sector when it comes to salary. Because the Act has scheduled down how much these people are supposed to get already. So whether they do something or they don't do anything, they still get the money. That's the issue. But in the public sector, in the private sector, performance-oriented is key. Then there should be some stock options. The reason why stock option is key, so this is where you are talking about share options, right? IFRS 2. The reason why this is important is because then we are trying to bridge the gap, the conflict of interest between the shareholders and then the board of directors, right? Because if you give them some share options, they now have a skin in the game. They know that whatever they do, if they sabotage the company, they will also be affected. If they run the company well, they also have some benefits to gain in the future. Those are the things we must understand when we talk about the statement on directors' remuneration. Then, risk management is crucial. Internal control. So this is the job of internal auditors and the audit committee and risk management of the board. So there must be effective and efficient internal controls in place to ensure that risks are identified, we find mitigating factors, and then reduce the impact of the risks on the entity. Then shareholders' right. Yeah. On the average, shareholders have a right to at least be informed once a year about the performance of the company. It's their right. They have a right to vote at general meetings. They have a right to be told when management is about to make some significant decision that will really, really change things. That is why when it comes to meeting of shareholders, we have the AGM, the annual general meeting, and then EAM, extraordinary meeting. The extraordinary meeting. The annual general meeting is the scheduled one that is done once a year. The extraordinary meeting is the meeting that the board of directors call for, where a decision is about to be taken which will require the input of the shareholders, but cannot wait until the next scheduled annual general meeting. And it's the right of the shareholders that if certain strategic decisions, like a merger arrangement, management cannot just get up and say they are going to merge with another company without the shareholders' input. Management cannot just get up and say they are going to acquire a company without the shareholders' input. So if the decision cannot wait until the next scheduled annual general meeting, then you call an emergency meeting, or what we call the extraordinary meeting, and then boom, that issue can be discussed. Why? Because the shareholders have a right to be involved in how the company is run and various key decisions that are made. Then certainly we talk about issues in respect of disclosure. That it's important that the directors see to it that whatever essential information that shareholders must know about must be presented. In other words, the financial statement should be presented in such a manner that it represents the true and fair view of the entity. Whatever disclosure there is, they must do it. But you got to understand that the fact that we say management should not conceal things from the shareholders does not mean they will tell shareholders everything. Because there are certain things that the board of directors could be working on, management could be working on, and they don't have to tell shareholders. Because if you announce that, then your competitor will also start working on it, and by the time yours is ready to come out, boom, your competitors have copied you. So sometimes a company can be working on a project. They will just tell the shareholders, oh, we are working on something. They won't even give them the details. Oh, what are you specifically working on? We are working on something. And that information could be kept sometimes up to 10 years before they will now announce that, oh, this is what we've been working on. And when that announcement is made, what happens usually is that the share price of the company, boom, goes up, because that is a game changer. It comes and transforms the whole industry that they are operating within. So when it comes to the Securities and Exchange Commission of Ghana, these are the requirements of the governance issues that we need to be mindful of. Then certainly we come to the governance issues in the Companies Act 2019, Act 992. The reality is that what is in the Act is just synonymous to what is in the Security and Exchange Commission of Ghana, with just a little add-ons. Do you get the idea? With just a little add-ons. So, for instance, when it comes to the Act, we have responsibilities and composition of the board. We've already discussed that. Number two, the directors. Because here, the Act specifies that, yes, directors must be appointed, and it shouldn't be one fit for all. There must be re-elections. So it could be a cycle of 2 years, you can go 3 times, or a cycle of 4, 5 years, you can go 2 times. Then it is important that there will be training and performance evaluation for the directors. The Act gives guidelines on that. And this is where the nomination committee of the board comes in. Because the nomination committee of the board is the committee responsible for bringing or suggesting candidates for the board, and also making decisions whether the board require some training, some workshop, which will be perfect to upscale, or if you want, provide the skills and expertise that the board will need. Then the third thing is committees. So the Act specifically states the committees and the roles of the committee that we must know about. As I've told you already, the Audit Committee is there, Risk Management Committee, Nominating Committee, Remuneration Committee is there. So all these are subcommittees of the board. So you can go to the exam hall, and for 5 marks, the examiner will ask you, as per the Companies Code 2019, Act 992, explain the roles of the following committees of the board: Remuneration Committee, Audit Committee. It's a question the examiner can just throw at you that you must be mindful of. Then you come to financial statements and controls, which we've spoken about. Relationship with shareholders, the annual general meeting, their rights to vote, and all of those things. But there is something that the Act also talks about, which is ethics and whistleblowing. All right? So it says that companies must have code of ethics that sets out the standard expected behavior of directors and employees. So every serious company, they have code of conduct in the company, right? In every organization, they have that code of conduct. The way you are supposed to dress, the way you are supposed to relate with people, it is there. But then another thing is whistleblowing. That there should be a mechanism in place where employees can report unethical behavior without the fear of, retaliation. So every organization must build that system so that if you see something going on, when you see something, or if you see something, say something. Hey, this country will suffer though. If you see something, say something. Oh, God. Hey, nyame, boy, why? Now, mind it. So if you see something, you go and say it. It's in the Act. Now, in as much as the organization must have that culture in place, I always say this, that in practice, make sure you are careful. Because if you go and whistle blow, there are a couple of things you must be mindful of. That what you are going to blow the whistle on is actually true. Number two, that you have an evidence for the thing that you claim the person is doing wrongly. Number three, that you will have protection. That's the idea. Like what you saw, what you are seeing in this administration, right? People, they did oral. Then people submitted, hey, this person has stolen money. This person has stolen money. This person has stolen money. It's called whistleblowing. Okay. If we call you to come and defend, be a witness for the person you claim has stole state money, can you come and be in the witness box? Now, why will people whistle blow but will not be willing to stand in the witness box? Protection. They may have the evidence, but somebody can agbalagba you. Okay? You are just standing in the witness box now, then we do like this. Au revoir, mon ami. You are gone. Or the other side of agbalagba. Okay? You will get home easily. You will eat. The following morning, nobody will hear from you again. When they come and break your door, you will write suicide note and leave a note behind, and you are dead. And the police will come and they will look at it and they will say, oh, it's a suicide. The person took his life. He was tired of life. But somebody has agbalagbed you because of whistleblowing. So that is, although the company must create the environment, you must make sure that what you are blowing whistle on is true. What you are blowing whistle on, you have evidence. So that when we call you, you will bring evidence. Then number three, that you will be protected. Because imagine, just an example, okay? Imagine you are walking to your CEO's office. Then for some reason, the office was open small. And you peeped through. And the secretary of the CEO was sitting on the lap of the CEO. Then you run out. Then you go and whistle blow. Hey, the secretary and the CEO, they're having inappropriate relationship. Who are you going to report to? Maybe there is a whistleblowing committee in the company. That committee, they and the CEO, they are together. Or somebody in that committee is friends with the CEO. So immediately you come and tell the committee will say, oh, that's nice, go, we'll look into it. Then you go and tell the CEO, do you know that this is what this lady came to tell us? Which lady? And he said you are with the secretary. Okay, then they will invite you again. Where is the evidence? Oh, I saw them. God is my witness. Hey, heaven is... We don't do it under whistleblowing. If God is your witness, die and go to God. So the evidence must be there. Now, by the time you are getting to that level where you are saying God is your evidence, but then you're going to lose your job. Or, as I said, they will visit you in the house. By the time you realize you are gone. So there is whistleblowing. It should be encouraged. But make sure it is true. Make sure you have evidence. Make sure you have protection. These are the things that you must understand generically when it comes to corporate governance, in financial reporting, corporate reporting. And I'm going to be ending around here today. And we'll continue with the discussion some other time. All right? So these are the theory issues. Just one of the areas that the examiner can get goosebumps on that you have to be mindful of. Okay? So in the next session available, you'll be notified about it in the Google Classroom. We may go into maybe ethics. Then we'll touch on integrated reporting, like this, to see how we can bring the discussions home. All right? But the main thing is that in addition to learning everything we are discussing here for the purpose of the exam, you're also learning it for your profession. That is why I brought those examples about the whistleblowing especially. That it's for your own life. So it's not everything you say. There are certain things you will see, you have to go to your grave with it. If you go and whistleblow, you are cutting your grave short. You got to be careful. All right, so that's it. Enjoy the rest of your evening, and I'll see you in the next one.